Welcome! In this video, what happens in the future if we buy Zbcn for $10,000? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze Zbcn.
First of all, mentioning the existence of such a downtrend actually shows that the price has been reacting from lower and lower levels for a long time in the past, moving downward. A downtrend consists of consecutively lower highs and lower lows. In other words, each recovery stays below the previous peak, and each pullback dips lower than the previous bottom. This indicates that the market has been under selling pressure for a certain period. Buyers are weak, and sellers have control over the price. However, in technical analysis, no trend lasts forever. At some point, this trend must be broken because market balance constantly changes, and the balance between buyers and sellers always fluctuates. Especially after a long downtrend, seeing the price getting tighter increases the probability of a breakout. At this point, breaking the downtrend is considered a very strong signal in terms of market psychology, because the moment the trend is broken, the dominance of sellers ends and the possibility of buyers taking control rises. A downtrend line is usually defined by a line passing through the peaks of the price. Every time the price approaches that trend, sellers step in again and increase the selling pressure. However, the fact that the price finds buyers at lower and lower levels each time shows that buyers' patience has not run out and that they are gradually gaining strength. At this point, each touch of the trend line is like a test. The power of sellers is tested. But when buyers become strong enough to push the price above the trend line, the downward momentum that has dominated the market until then comes to an end. In technical analysis, this breakout is very important because when a trend line is broken, not only does the price change direction, but the psychology of the market changes fundamentally as well. At that moment, the majority of investors believe the decline is over and that a new upward trend has begun. After a trend breakout, the price is usually seen rising with volume, because not only small investors, but also big funds and institutional investors follow these breakouts. For them, the trend breaking is a buy signal. This accelerates the upward movement of the price. At the same time, after this breakout, the trend line that previously acted as resistance now begins to act as support. So even if the price pulls back again, it now tries to hold above the line instead of staying below it. This is one of the clearest indicators that the downtrend has ended and an uptrend has begun. Another important point is that before a downtrend is broken, the price usually tightens. In other words, fluctuations get smaller and smaller. This tightening is actually like the calm before the storm, because up to a certain point, the price keeps finding buyers at lower levels, but sellers continue to resist as well. As a result of this clash, the price squeezes into something like a triangle. However, every tightening ends with an explosion. If this explosion is upward, the downtrend is broken and a new upward wave begins. This rise is usually very strong because the price has been suppressed for a long time, so the accumulated appetite of buyers is suddenly released. The moment sellers' pressure ends, buyers push the price up rapidly. Breaking a downtrend is not only technically powerful, but also psychologically, because investors who have seen the price fall for a long time are mentally worn out and have suffered continuous losses. Most of these investors now want the decline to end. When the price breaks the trend and rises, the confidence of these investors returns. They start buying again. This accelerates the rise. Also, when the trend is broken, new investors are attracted to the market, because a trend breakout is seen as a sign that new opportunities are beginning. The participation of new investors makes the rise even stronger. Breaking a downtrend usually forms patterns as well. For example, inverse head and shoulders or double bottom formations often support the breakout. All these formations essentially tell the same story. The decline is ending, the rise is beginning. Especially if patterns work simultaneously with a trend breakout, the upward potential of the price becomes much stronger. Because in technical analysis, the confidence increases when different indicators give the same signal. After the price breaks the trend line, there is usually a pullback at first. This pullback is actually a big test for investors, because the broken trend line is retested. If the price holds above that line, it shows that the breakout was not false and that a real trend reversal has begun. That's why investors closely follow these tests. If the retest movement after the breakout is successful, the price advances upward much more strongly. With the break of the downtrend, targets are also set. Analysts usually take past resistance levels or Fibonacci retracement levels as targets, because when the trend is broken, the price now has the potential to reach those levels. Especially if the breakout happens after a long downtrend, the targets become much larger, because the price, which has been suppressed for a long time, now moves upward with much greater energy. This energy creates an explosive effect. Also, the breaking of a downtrend can be supported not only by technical analysis, but also by fundamental analysis, because most of the time, the negative news or weak expectations that push the price down eventually come to an end. This causes investors' expectations to change. So a trend breakout actually has a meaning beyond just lines. Both psychology and market dynamics have changed. In conclusion, breaking a downtrend means a new era has begun for the price. The dominance of sellers has ended, and buyers have taken control. After this breakout, the probability of the price reaching higher levels increases, because technical indicators, investor psychology, and market expectations align in this direction. That's why the phrase, "First of all, there is such a downtrend, the price needs to break it," actually summarizes the turning point of the market. If the price manages to do this successfully, the way for a rise opens and the price can gain much stronger momentum to reach new levels. But we cannot make decisions based only on trends. So let's also look at other metrics. Keep watching.
The ascending channel formation is considered a highly important structure in technical analysis because it shows how the price moves within a certain trend between both support and resistance levels. In particular, ascending channel structures reveal that buyers are dominant in the market and that the overall direction of the price is upward. In such structures, the price usually takes support from the lower band, shows balanced movements around the middle band, and if momentum comes into play along with volume, it moves toward the upper band. The key point to pay attention to here is that the middle band works like a threshold or test level. If the price breaks this middle band clearly and strongly and maintains stability above it, this creates a very strong signal that the uptrend will continue. This is because the middle band generally reflects temporary corrections and profit-taking within the trend. However, if the price manages to surpass this level, it shows both that the buyers remain strong and that the pressure from sellers has weakened. Once the price passes the middle band and heads toward the upper band, it generally creates psychological confidence as well. Investors often think that during such breakouts, the price will reach previous highs and even surpass them. For this reason, a breakout of the middle band often increases buying pressure and brings new buyers into the market. At this point, targeting the 10 cents level is meaningful not only from a technical analysis perspective, but also from an investor psychology standpoint. Because round numbers, and especially psychological levels like 10 cents, remain in investors' minds as target points. Therefore, after breaking the middle band, the probability of the price reaching 10 cents on its way toward the upper band is quite strong. Another factor to pay attention to in such ascending channel formations is trading volume. Breaking the middle band alone may not be sufficient, but a breakout supported by volume shows that the momentum of the price will be stronger. If the price breaks the middle band with low volume, it may be difficult to talk about a lasting uptrend. However, when buyers step in strongly, both the progression toward the upper band accelerates and a more stable outlook develops in market dynamics. In such a scenario, reaching 10 cents is not only possible but also a highly probable outcome. Ascending channels also show that the trend is continuing in a healthy way. This is because the price continues to form higher lows and higher highs. This demonstrates that the upward market structure remains intact. A breakout of the middle band is generally a harbinger of a new higher high. Therefore, the momentum gained from this point both increases the strength of the trend and creates expectations that the rally will accelerate. This expectation encourages investors to make more purchases, and in turn, the conditions required for the price to reach the upper band strengthen further. The 10-cent target, from a technical perspective, is not only a natural result of the upper band, but also a milestone in the market. When the price reaches this point, it may trigger profit-taking levels for many investors, while also increasing interest from new investors. Although this may create temporary fluctuations in the market, in the long run, it allows the price to establish a stronger uptrend.
When we evaluate a $10,000 investment in Zbcn, seeing how our capital could multiply actually becomes an important calculation that broadens the investor's vision and reinforces their hopes for the future. First, we start with a simple mathematical operation. Assuming the current price is $0.005, when we divide our $10,000 by this level, we get 2 million Zbcn. This amount actually means quite a high number of tokens because owning millions represents a very serious profit potential for the investor in the long run. In crypto markets, investors usually see such large volume purchases as a way to create strong leverage in their portfolios. In other words, even a small price increase can turn into a significant gain for the investor thanks to the multiplier effect of millions of tokens. One of the most striking points here is the scenario where the price reaches $0.10 in the future. If Zbcn reaches this target, our 2 million coins multiplied by $0.10 equals a very high figure of $200,000. This shows that the investment has increased exactly 20 times. In other words, an initial capital of $10,000, which could be considered relatively small, has the potential to turn into $200,000 in the future. This situation has many psychological, financial, and strategic dimensions for the investor, and these need to be examined in detail. First of all, the psychological effect of such investments on the investor is quite significant, because most people, when they see the possibility of multiplying their capital 20 times, act with hope, excitement, and motivation. However, at this point, rather than acting hastily, being patient is one of the most critical parts of the investment process. Projects like Zbcn can be listed on new exchanges over time, investor communities can grow, and they can become more recognized by the media. Since each new development can have a positive effect on the price, it is very important for the investor to patiently wait for these processes. Especially purchases made from very low levels such as $0.005 carry the potential to create a great multiplier effect in the long run. From a financial perspective, growing from $10,000 to $200,000 not only provides the investor with capital gains, but also brings new investment opportunities, because such growth allows the investor to invest in different areas. For example, a capital of $200,000 can be directed to safer assets such as real estate, stocks, or gold outside the crypto market, creating lasting wealth. This large profit earned in the crypto market actually becomes a strong step toward financial freedom in the future. For an investor, while the initial $10,000 may have been capital set aside with risk, $200,000 could enable a very different standard of living. At this point, the most important thing is how the investor evaluates this profit. From a strategic perspective, Zbcn reaching $0.10 indicates that the project's ecosystem has strengthened, its investor community has expanded, and its technological infrastructure has been recognized. Because the price of every coin is shaped not only by speculation, but also by the technologies developed by the project team, partnerships, exchange listings, and general market interest. If Zbcn's price can reach $0.10, it means the project has secured a strong place in the sector. In such an environment, an investor holding 2 million coins not only earns capital gains, but also gains a strong position within the project's community. Because large coin holders are often called whales in projects, and these individuals have significant influence within the community. In addition, in the long run, it should be noted that prices in the crypto market don't just reach a target and stay there. In other words, $0.10 may only be a stop along the way. If market conditions are favorable and the Zbcn project grows faster than expected, the price could rise above $0.10 and test levels like $0.20, $0.50, or even $1. In such a scenario, a 2 million coin holding could offer the investor a millionaire-level wealth. However, these possibilities are not only important for dreaming, but also for strategic planning. Because the investor may choose to cash out a portion when it reaches $0.10 and keep the rest for higher targets. This way, they both reduce risk and preserve the possibility of larger future gains.
Nevertheless, it is important to realize that this investment entered with $10,000 is a long-term journey. In the crypto market, everything can change quickly, and prices can show sudden ups and downs. But what matters here is that the investor does not lose their strategic perspective and remains focused on long-term goals without getting stuck on short-term fluctuations. Because most of the time, the biggest profits belong to patient investors. If Zbcn's potential truly develops strongly, this investment will be a great gain not only financially, but also in terms of the investor's confidence and vision. Another aspect of the scenario is related to portfolio diversification. When an investor puts their entire $10,000 into Zbcn, they take on high risk, but also capture high return potential. If this investment succeeds, the investor can distribute the large profits gained in the future into safer investment tools, balancing their risk. This is very important for preserving the money earned in the crypto market in the long run. An amount like $200,000 opens an important door for the investor on the path to financial freedom. Considering all these factors, a $10,000 investment in Zbcn, if the price rises to $0.10, not only provides the investor with a 20 times return, but also offers life-changing opportunities. An investor who moves forward patiently and strategically with awareness of these opportunities has the chance to progress in the future not only with a large capital, but also on a much stronger financial foundation. An investment that initially seems small can open the door to great wealth when combined with the right project and the right timing. This is why the possibility of turning a $10,000 investment into $200,000 is one of the most exciting scenarios that can shape an investor's future.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.